Hi traders, it's Ben Ngoo. Welcome back to my YouTube channel. Most of my viral posts on TikTok are about losses, and one thing is common in the comment section. I see a lot of traders talk about market structure shifts, market structure shifts. Bro, you didn't wait for a market structure shift. There was a market structure shift there before you took the trade, this and that. And I realized majority of those traders are actually new or newbies. I see the trend lately, and a lot of new traders see market structure shifts as some sort of like holy grail or a magical concept. And one thing traders need to realize is these concepts have been there for a very long time. Personally, I've been trading market structure shifts as my entry technique for about 3 years. Even before I knew what ICT was, before I watched one single video of ICT, I've been using market structure shifts as entries. I've actually gotten funded and multiple payouts with market structure shifts as entries. So these concepts have actually been there for a very long time. Traders need to realize that most concepts in trading, most concepts we come across, they work. One way or the other, they work. Some traders actually trade only those concepts and are very profitable with it. So don't think, oh, this concept is actually better than this. Liquidity sweeps is better than market structure shifts. Fair value gaps are better than this. No, it doesn't work like that. They all work hand in hand. Every concept has its own win rate, has its own average risk to reward. And traders need to understand, you need to bring these components together to form a very solid system in trading. I've seen instances where traders buy at support and sell at resistance, and they are very profitable trading it. And the reason is because they know the red flags of their setups. They know when I'm supposed to trade this, when I'm not supposed to trade this. Now imagine trading the same entry technique for years, for 2 years, 3 years. You definitely know different variations of that particular entry technique, and you would have been perfect in trading it. So not about jumping from one concept to another concept, but about mastering it. Personally, I like to say I have a lot of experience in trading market structure shift because I've been looking at the same thing for a very long time, and I'm able to spot the red flags, spot when the setups are invalid because I've been looking at the same thing for a very, very long time. So basically, this video is actually going to share with you guys some red flags when it comes to trading market structure shifts. Probably you guys could implement it in your trading system, and when looking at market structure shifts, you have a different view towards it. Now, before we get into the video, smash that like button, hit that subscribe. Now let's get into it while I show you guys what I'm talking about. Hi traders, so I don't want this video to be unnecessarily long. I'm just going to dive straight into what I want to talk about. So I see a lot of traders trade market structure shifts and they just trade a lot of rubbish, to be honest. I personally, like I said in the introduction of this video, I've been trading market structure shifts for about 3 years, and I like to say I've actually perfected that as my entry technique. It takes time. Okay, even if you are using engulf, break of this, fair value gaps, whatever you're using as your entry technique, you need time to actually spot the red flags. And I've been able to spot the red flags, and when I see a trade, there's actually a very, very high chance it goes in my favor. Even if my overall bias is wrong, my entry actually saves me. And market structure shift is a very powerful technique. I see a lot of new traders talk about it, use it. A lot of traders implement it wrongly. So I'm actually going to try my best to show some things. I can't really show everything, to be honest, because some of those things actually come with experience. And this will just help you guys and guide you guys when trading market structure shifts. It's very simple, but yet so challenging to actually get profitable with it, with this entry technique. So let's imagine this is our point of interest. This is our level on the higher time frame, and we're looking to take entries on the lower time frames. Now price approaches this level. Okay, so probably it's a 4-hour level, and you're looking to like take entries on 5 minutes. So price goes into this level. Now you need to understand how price is actually going to move. It's actually not just going to move straightly. It's actually going to form structure. It's going to form structure, and you probably see something like this, price coming down into this. Now we all know market structure shifts is all
still support resistance. Okay, if you've been trading for a very long time, you understand this is just a basic market flow, how market moves, higher high, lower high type of shit. This is a low, price forms a high, a lower low, lower high, lower low, lower high, lower low. What do we expect? Lower high for a lower low when price is going down. And then what happens when you see a break of this lower high? What do you get? A new higher high. So definitely this trend has actually shifted to the upside. Okay, so you see a pullback, a retest here. Okay, and a continuation to the upside. So this is your basic market structure shift, right? So this is when we say, okay, the trend has actually shifted. The moment price breaks this high and push to the upside. Now, some traders trade the immediate break, weak break. I've actually traded it back then. I set my buy stop above here. Once price triggers my buy stop, I'm in because it's a break. Okay, it's a break, it's a new high formed. Price is actually weak above that. And I was actually pretty consistent for a while, for some months, and then I started taking losses. And I am not a very comfortable trader. I'm a very emotional trader, and I'm not really comfortable with losses. I don't like taking losses. In as much as we can avoid them, I like taking few losses. So I decided, you know what? I start waiting for candle closes, and then my psychology got way stronger. My win rates slightly better. So when waiting for candle closes, what do you expect? Your price to tap into your level, okay, because you're looking to buy. The overall trend is bullish. You want price to tap into your level, break and close above the previous lower high for price form a new higher high, and a candle full body close to the upside, and then a retest to continue going up. This is actually what you want to see for you to take a trade. So I see traders trade just the immediate break with a buy stop, and I don't know if they've actually backtested their strategy enough, but it doesn't just make sense, because what does wicks show on the charts? What does wicks mean in trading? When you see a wick, it shows, especially a long wick, it shows rejection. Okay, I'm looking at a level. Okay, let me just give an example somewhere. Okay, probably here. Now imagine. Now let's see. We have a level here. Okay, this is just a random level because I've not done any analysis on this, but this is a random high, okay? Now, obviously, there are orders above this high, okay? Now, traders, there's a reason why the market reverse from here. Some traders will look to buy above this. It all depends on what the market is saying at that particular point in time, okay? And the flow of the market. Now you can see there's actually a level here. What happened here? Price wicked. See this long, strong rejection above this. What does that mean? It means there was a time where price was actually at this point. So buyers was in control, and then suddenly sellers came in and price closed below this. So that means they were unable to agree to buy above this high. So it shows that there's actually a rejection of this high. Price took out orders here, okay, liquidated this high, and then pushed to the downside. Now, most likely when you see a high from there and price actually just reaches above it, rejects, most times price actually comes back to the low and price just kept going down. Okay, that's what it means in trading. But when you see a full body close, now take a look at this. Now there's a low here. Now I'm just using this as examples. Okay, don't just go on your account and just start trading this type of thing. Now you see a strong close below this. Okay, now you saw a strong close below this. What happens? Price pulls back and then keeps going. When you see that strong close, what does it mean? Sellers agreed to sell below this. Okay, there's a reason why price reversed from this, and there's a reason why there's a close, full body close. There's an agreement on this on the 5 minutes time frame. So that's actually what you want to see when you are trading market structure shift. You want to see a full body close above. That gives you stronger confirmations that price is actually going to go in a direction, not just candle wick above. Okay, because wicks shows rejections. And secondly, there's something else I see in traders. Okay, now let me map this out. I like to draw, okay, some things. Now you see price actually trending all the way down. Okay, now we have like a huge push, and then we have like mini structure here, and then we have this to the upside. Now you can see, if we look at this, okay, this is the last low. This is the last low. Okay, this is the low, this is the high. Now this high is not confirmed until this low is broken. Okay, the lower high is not confirmed until the last low is broken, because we don't know where price might actually pull back to. Price could still very much pull back into this place and push to the downside. So definitely this will not be the lower high at that point. This will be the lower high. Okay, so before I digress, this is internal structure. Now imagine this is a level where we are looking to buy from. Okay, let me put in technicals here. This is a level we are looking to buy from. Okay, price tapped into this, forms internal structure before it gets there. What I see traders do is, this is their last low high they're looking at. Okay, now they are failing to realize that this is the lower high we have here. This is the last lower high. This is where there is a market structure shift. Now, this is a mini shift in this mini downtrend, okay? This is a mini shift in this mini downtrend. Now, I take this type of entries. When you see price pull back into, price should go up. Now, some traders take this and imagine and just assume this is the shift for the entire downtrend, the entire structure. No, it doesn't work that way, because most times, what do you tend to see? You see price get back up here and then push to the downside, and then you get stopped out. Okay, now what do you want to do is, if you take this type of entries, they are aggressive entries. Okay, these are my aggressive type of entries, and they're always very quick, to be honest. This is the last lower high point. This is the start. This is where price shifted to the downside. This is where you want to map out. Once price comes back into this level, if you've taken entries somewhere around here, you really want to move your stop loss to break even, because there's a very, very high chance if price doesn't just break and continue going up, price will actually stop you out. Like, once price reverses from here, there's nothing you can do about it to stop you out. So this is one red flag traders need to pay attention to. Okay, so I'm actually going to give examples on the charts so you guys can actually see what I'm talking about. So for you to actually be way more confident in taking this, you really want to see a break above this high, a pull back into this and continue to the upside. This is when you get the overall market structure shifting and going to the upside. And another thing I tend to see with market structure shifts with traders, when trading market structure shifts, is they kind of like, okay, let me give an example. They kind of like struggle with noting the highs and the lows. Okay, so let me give an example. So let's say this is where we are looking to buy from. Okay, now they see something like this and they assume, okay, you know what, let's remove this. Let's remove this. Okay, so they see price trading into an area of interest. Okay, and they see a high formed, price pulls down, and then you get this break. Now, according to them, price forms a low here, it failed to form a new lower low, and it broke above this high. Now, when you see this, this is not a market structure shift. This is not a market structure shift, because you could just see something like this. Now, this high is still being respected, okay? This high is still being respected. We have a low, we have a high, we have a lower low. This is not a lower high. Until this low is broken, you cannot confirm your high, your lower high. So we could see price from this low, form this mini structure here, and get back to the high here and just pushes down to the downside. Okay, so this is not a market structure shift. I tend to see traders do this and they be like, oh, this is my MSS, whatever they call it, and then boom, to the upside. It doesn't work like this. Okay, I don't know what you're trading. It doesn't work that way. So this is actually a pair I was looking at last week. So I'm just going to give a quick analysis on it and show you guys how powerful market structure shifts can be. So obviously on the 4-hour, price is actually momentarily bullish. Okay, price is bullish. We can see it more bullish candles currently than bearish candles. I don't need to plot anything or say. I can see we have only 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 bearish candles in the last 4 days. Only 9 bearish candles in the last 4 days. How many bullish candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 15 bullish candles. Way more bullish candles than bearish candles. So there's very high chance if you take a trade here and it's a buy, you would win that trade. So what do I look for? I look for levels where price could react from. I plotted that level. I was looking for some reaction here. Okay. Now dropping down to the 5 minutes. What do you see? You see price trading into that level. Where do you want to buy from? Shifts. Okay. Now you see this high here. Price from the low, price from the high, price from the lower low. Okay. It breaks. See the full body close. What happens? Price pulls back into that, grab some liquidity, and then we push to the upside. That's how simple market structure can be. Very, very simple. As long as you get your bias right. Most times when you trade with market structure shifts, there's a very high chance you are winning that trade. Okay? So that's just where it is. Simple stuff. Simple stuff. So if this video has actually been informative, my Telegram link is in the video description, and can drop a comment. Any question you have, you can actually ask. I'm here to reply. See you guys in my next video, and bye for now.